Welcome to this deep dive. We are jumping into something absolutely vital this week for understanding the pulse of the continent. That's the dynamic African transportation and logistics sector.
It really is the engine room, isn't it? I mean, everything from getting goods to market, people to jobs, connecting countries. It all relies on this sector running, well, smoothly.
Exactly. And for this deep dive, we've gone through a whole stack of source material, articles, reports, your own notes, basically covering the week of May 26th to June 1st, 2025. Our mission is pretty simple. Unpack it all, pull out the most important insights, and, give you that shortcut to being really well informed on what's actually moving Africa right now.
And the sources from this past week, they paint a really interesting picture. It's often contrasting, actually. See significant strategic progress, these big investment pushes happening at a high level.
Right.
But then you also see these persistent, sometimes pretty severe operational challenges and the undeniable impact of regional instability playing out right there on the ground.
Yeah, it's a week of ambitious plans meeting that gritty reality. So maybe set the scene for us. What kind of ground are we going to cover today based on these sources?
Okay, so we're going to look at, pretty much everything from major infrastructure funding talks and ambitious aviation expansions right down to the nitty-gritty of port congestion, those really crucial labor negotiations we saw unfolding, and also how security issues in different regions are impacting, everything from trade flows to humanitarian aid delivery.
Okay, let's unpack this then. Maybe start with the big picture, the high-level strategy, the funding dynamics that really seem to dominate the sources this week. What stood out there?
Well, right at the top, definitely the African Development Bank, the AFDB annual meetings that were held in Abidjan, May 26th to the 30th. The main theme, making Africa's capital work better for Africa's development, really set the tone. And there was this very strong, clear emphasis on the absolute necessity of investing in regional transport corridors for continental integration.
Regional corridors, that sounds like it ties directly into the goals of the AfCFTA, the African Continental Free Trade Area, doesn't it? Making trade easier between countries.
Absolutely. That's precisely the connection. They really hammered home the need to mobilize capital for this large-scale infrastructure. And they were drawing lessons from past experiences like PID, the Program for Infrastructure Development in Africa. A joint action plan for 2025 to 2027 was specifically endorsed, and it prioritizes exactly these types of regional connective projects.
Okay.
And, naturally, the AFDB itself, being a key financier, plays a huge role in shaping where that focus and that funding actually goes.
So which specific corridors were getting the most attention or maybe seeing progress mentioned in the sources this week?
Several key ones popped up. The Trans-Sahara Highway, Algiers down to Lagos, that was noted as having sections reportedly nearing completion.
Right.
Then the really ambitious Abidjan-Lagos corridor, that big transnational coastal motorway project. There were mentions of significant investment interest.
How significant?
Reportedly up to $15.6 billion. And they're anticipating construction could start as early as 2026.
Wow, $15.6 billion interest. Those are truly massive undertakings.
They really are. Then you've got the Central Africa Multimodal Transport Corridor linking Point Noir to N'Djamena. That was noted as getting African Development Fund, or ADF, financing. The Lobito Corridor connecting Angola, the DRC, Zambia, that was highlighted for its strategic importance, particularly, for mineral exports.
Makes sense.
The Nacala Rail and Port Project in Mozambique and Malawi also got recognized for its strategic role in southern Africa. And Tanzanian corridors were mentioned too, including the Tabora-Kigoma Railway and progress on the Central Corridor Standard Gauge Railway, the SGR, which actually has an AFDB guarantee backing it.
That's quite a list. Vital arteries across the continent getting attention. What about the funding itself? How is the approach to financing these huge projects evolving based on what the sources said?
Yeah, this is where it gets really interesting, I think. The AFDB is making a big push to mobilize domestic capital.
Domestic capital, like what?
Things like national pension funds, sovereign wealth funds. They're also trying to directly tackle what they call the cost of money and the risk premium that's often associated with African infrastructure projects. The things that make borrowing expensive and can scare off investors.
Right, because the traditional development finance, like from DFIs, it just isn't enough to cover the need.
Exactly. The estimated annual infrastructure need for the continent is just immense. Somewhere between, $130 billion and $170 billion a year. Traditional DFI funding alone, it's just not going to cut it. So the goal is clearly to make these projects, more attractive. More transparent, better structure, less risky, basically, to pull in that necessary private investment. And they're really emphasizing an integrated approach now, linking these corridors not just to moving raw materials out, but linking them to industrialization, to value addition, creating jobs. They specifically highlighted youth employment during the meetings.
We also saw the EU-AU Global Gateway Initiative mentioned this week too, didn't we? How does that fit in?
Yes, exactly. The outcomes from the third EU-A ministerial meeting highlighted the Global Gateway's focus on scaling up global connectivity. And African transport corridors are definitely a key part of that strategy. They've actually adopted, I think it was 138 Global Gateway flagship projects between 2023 and 2025.
138. That's a lot.
It is. And it certainly provides alternative funding streams, which is, a positive thing. But as the sources pointed out, it also adds another layer of complexity for African nations. They've got to manage multiple large-scale initiatives coming from different international partners simultaneously.
Right. So big strategic visions, pushes for major funding. What about the aviation sector on a macro level? IATA, the International Air Transport Association, had some points this week.
Right. IATA's updated 2025 financial outlook for African airlines. It projects a collective net profit of about $200 million. Now, that figure is basically consistent with their 2024 estimates.
Okay.
What's particularly interesting about that, though, is it's projected despite an anticipated 8% year-over-year growth in demand and a 7.3% increase in capacity for African carriers.
Wait, flat profits even with demand and capacity growing? That seems off. What does that suggest is actually going on?
Well, it suggests that while passenger demand is definitely there, the revenue gains are pretty much being eaten up by stubbornly high operational costs.
Like fuel.
Exactly. Things like fuel price volatility, persistent operational inefficiencies on the ground, adverse currency movements making fuel and maintenance pricier.
Yeah.
It could also point to maybe a lower propensity for air travel spending in some markets, limiting how much airlines can actually charge. And this financial reality, it could potentially constrain their ability to invest in things like fleet renewal or, significant expansion.
Right.
Especially for the smaller regional carriers.
Right.
IATA also noted the market opportunity opening up for European carriers in North Africa through those open skies agreements. They could definitely increase competitive pressures there.
Okay, so that gives us the high-level view. Big strategy, funding pushes, facing some hurdles, aviation facing cost pressures despite growth. Let's transition now, maybe get into those regional spotlights, looking at how these strategies actually translate into developments and, the challenges playing out on the ground, because that's often where the real story is, isn't it?
Absolutely. And let's kick things off in Southern Africa. We have to focus heavily on South Africa and its state-owned enterprise, Transnet. It was an incredibly intense week for them, based on the sources we looked at.
Intense seems to be the word for Transnet lately. What specifically was happening this week?
Okay, a major financial development was the resolution of that long-standing dispute with Sasol. Transnet agreed to a net payment of R$4.3 billion to Sasol Oil, payments due by June 30th. This basically resolves these protracted legal battles, mostly about historical pipeline tariffs, that were actually heading towards the Supreme Court of Appeal. So it puts an end to that uncertainty.
Okay, resolving a legacy issue is one thing, but R$4.3 billion. That sounds like a massive chunk of cash to be paying out right now, given their situation.
It absolutely is.
Woo.
And the sources really highlighted that this payment comes when Transnet is already, navigating a pretty precarious financial landscape. They're relying heavily on that R$51 billion government guarantee facility.
Right.
So this significant cash outflow could definitely strain their ability to fund crucial operational improvements, maintenance, from their own resources, at least in the short term.
And they're also trying to generate some capital through asset disposals, right? Like that property auction we saw mentioned.
Yes, that was another item this week. They're moving ahead with a strategic auction of what they call non-core residential properties, things like houses, hostels, lodges. As part of an asset disposal strategy the government approved last year, the goal is, generate capital and streamline their portfolio.
But is selling off some properties really going to be enough to, move the needle on their bigger financial problems?
Probably not, the sources suggested. I mean, while it offers some financial relief, it's unlikely to single-handedly fix the systemic issues, not when Transnet's reported debt is over $130 billion. And they have these massive estimated investment needs just to restore and upgrade their infrastructure.
And on top of all that financial pressure, there were those critical wage negotiations going on. Still unresolved.
Very much so, and still quite tense. Negotiations between Transnet and the union, UNTU, the United National Transport Union, they continued. Both sides are considering a proposal from the CCMA, the mediation body. A response is due by June 10th. This carries a significant risk of industrial action, which is particularly worrying right now with the peak citrus export season coming up fast.
Yeah, and we've heard estimates of the economic cost when Transnet isn't performing optimally. It's huge, isn't it?
The sources mentioned estimates that the cost of logistics underperformance in South Africa could be around R1 billion per day.
R1 billion a day.
Per day. So any protracted dispute or strike could severely disrupt port and rail operations at a really critical time and have major immediate economic consequences.
Wow. Okay, beyond the negotiations, what were the actual operational reports from the ports themselves looking like this week? That gives us a real-time pulse.
Well, as of May 30th, the reports painted a, let's say, mixed but often challenging picture. Cape Town Container Terminal, for instance, was windbound for 10 hours.
Okay.
Durban saw vessels berthing okay, but the Point Terminal had truck movement delays, issues with slot bookings, several cranes reportedly down for maintenance.
And what about the rail side in Durban? That's such a key link for regional trade, right?
Right, and this is where the sources highlighted something, well, quite striking. While rail dwell times for container corridor units, so domestic units were reported around 4 days, which isn't great, but okay. The dwell time for overborder rail units was an exceptionally long 99 days.
Not 99 days dwell time for overborder rail. That's unbelievable. What does that even mean practically?
It points to a severe bottleneck impacting regional freight movement through Durban by rail, whether it's rail capacity limits, scheduling chaos, border clearance delays, security issues, maybe a combination. Waiting 99 days basically cripples the flow of goods by rail from Durban into neighboring countries. It severely undermines Durban's role as a gateway to southern Africa, and it adds massive costs and unpredictability for businesses. At the time of reporting, 4 vessels were also anchored outside the port, waiting.
Just incredible numbers. Port Elizabeth also had issues, you mentioned.
Yeah, windbound there for several hours, too, and union meetings were reportedly causing slowdowns. Richards Bay Coal Terminal, however, seemed active. Coal export operations were noted there.
We also saw mention of something called Operation Chanella this week. How does that connect to transport and logistics?
Right. Operation Chanella is this multidisciplinary security operation. Various law enforcement agencies involved. This week's activities included arrests, searches, vehicle stops, and specifically resulted in confiscating things like copper cables.
Ah, the table theft issue.
Exactly. This directly relates to transport security because copper cable theft, especially from real signaling systems, is a major cause of disruption and delays for Transnet's freight operations. So operations like Chanella are aimed at protecting that critical infrastructure, trying to enable smoother transport flows.
And speaking of infrastructure and industry, the Gauteng automotive sector was highlighted.
Yes, developments in the Northern Corridor, particularly around TSE, the Troy Automotive Special Economic Zone, and the Automotive Supplier Park, ASP. Look, the auto manufacturing sector relies heavily on sophisticated logistics, just-in-time supply chains for parts, finished vehicles.
Right.
So growth there just underscores the critical need for efficient road and rail links to ports and local distribution networks, which inevitably means more traffic, more freight volumes, requiring constant infrastructure upgrades.
And finally, on South Africa, the Sustainable Infrastructure Development Symposium, SIDCIA, that wrapped up this week.
It did. They unveiled the second edition of their repository of funded infrastructure projects, announced new top 7 project priorities. They reported over R$313.5 billion in construction projects and R$180 billion in energy infrastructure already in the pipeline. This kind of signals a more structured, more public approach to identifying projects attracting investment and, trying to tackle that huge infrastructure backlog across various sectors, including transport.
Okay, let's shift gears. Head over to West Africa. What developments caught your eye there this week?
Well, there was this fascinating, almost contradictory situation highlighted in Guinea. There's a new Chinese joint venture, Xunyu Shipping. They just launched services specifically focused on shipping bauxite out of Guinea and Sierra Leone, and they have ambitious targets planning like 40 voyages, aiming to move over 6 million tons in 2025. They've got a fleet expansion plan, too. It's all based on long-term agreements with mining companies for the cargo.
Okay, sounds like a significant new player focusing on a key export commodity. Pretty positive for bauxite logistics.
It does sound like it, and it could be. But almost at the exact same time, SD Mining, which was noted as a key partner and a major cargo source for Xunyu, announced it was suspending all of its operations in the Axis area of Guinea.
Hold on. So you have a new shipping venture launching, banking on bauxite exports. And one of its main intended suppliers immediately hits pause on operations.
Exactly. It just really highlights the inherent volatility and risk involved in resource-linked logistics in certain regions, doesn't it? It immediately puts those new ventures and those long-term transport agreements to the test when the actual on-the-ground mining operations face these sudden disruptions.
Yeah, that's tough timing. What about road policy in Nigeria? Something happening there this week.
Yes, the federal government is seeking cooperation from state governors. They want them to grant a 500-meter corridor of land along 4 of the older legacy highways.
500 meters. Why?
The purpose is to develop the infrastructure needed for future tolling on those roads. It signals a pretty significant push towards road commercialization, basically, using tolls as a strategy to fund much-needed maintenance and upgrades on federal highways. It's a common model globally, of course.
But getting land and actually implementing tolls, that can be politically sensitive.
Oh, absolutely. Success is going to depend heavily on navigating those political dynamics, getting public acceptance for paying tolls, and crucially, setting up transparent management for the revenues generated. And like you said, that 500-meter corridor request, that involves potentially complex land acquisition processes too.
Moving over to the DRC, we saw developments related to both urban logistics and that critical mineral transport sector.
Yes, on the urban side, Zoomline, we'll hear that name again, signed an MOU, a Memorandum of Understanding, with the city of Kinshasa for a major waste management project.
Waste management. How does that link to transport?
Well, while it's about waste, it involves significant transport and logistics components, setting up collection systems, transport routes, building transfer loading stations, or TLSs, and material recovery facilities, MRFs, for processing the waste. It has the potential to create up to 5,000 jobs, apparently, and significantly improve urban logistics and public health in the capital.
Okay, interesting angle. And the minerals side, the DRC is obviously a huge global player there.
The sources highlighted that the DRC is in negotiations with the U.S. government. They're aiming to finalize a major minerals agreement by the end of June. The goal is to attract significant investment into the sector. Now, if this agreement goes through, it could have profound impacts on the demand for transport infrastructure, road, rail, port to support expanded mining, maybe even local processing.
Which could benefit routes like the Libido corridor.
Exactly. That could particularly benefit routes like Libido, which is specifically designed to link the DRC's mining regions out to the Atlantic coast.
In Cameroon, bauxite logistics also came up again?
Right. Canyon Resources, which is developing a bauxite project there, secured a $140 million credit line from AFG Bank this week. And critically, this funding is specifically earmarked for logistics infrastructure related to their Minim Martap bauxite project.
So dedicated funding for transport.
Yes, intended for acquiring locomotives, wagons, developing dedicated rail and port facilities. It's a really concrete example of linking that resource extraction investment directly to the necessary transport infrastructure. And it builds on their existing stake in CamRail, the national rail concessionaire. We also saw some other tenders issued for vehicles for various government ministries, another small sign of procurement activity in the sector.
What about ports in Ghana? Any updates there this week?
Pima Port reported increased berthing delays this week, up to 3 days apparently. These delays were put down to vessel bunching, basically, multiple ships arriving off schedule, overwhelming the port's capacity.
It's a common problem.
Very common globally. But it causes port congestion, triggers supply chain delays for importers and exporters, leads to higher shipping costs, and just reduces the overall reliability of the port for global trade.
And the Gambia saw some notable World Bank funding announced, didn't it?
Yes, a significant package, $52.6 million from the World Bank for transport and energy infrastructure. This includes funding for 60 kilometers of climate-resilient rural and urban roads. Standard enough. But what's particularly interesting, I thought, and quite forward-thinking, is the inclusion of funding for an active mobility corridor.
Active mobility, like walking and cycling.
Exactly. Dedicated bicycle lanes, solar-equipped street lighting. It signals a move towards more sustainable, more holistic, and inclusive transport solutions. Recognizing that mobility isn't just about cars and trucks, right?
Let's head east now, across the continent. What developments were making news there this week?
Okay, in Ethiopia, Ethiopian Airlines continued its strategic expansion. They announced a new passenger service to Sharjah in the UAE, starting June 1st, 4 times a week. This adds to their existing cargo services there, makes Sharjah their second UAE destination. It further strengthens their Middle East network, all part of their big Vision 2035 growth plan.
And also in Ethiopia, we heard that name again, Zoomlian.
Right, Zoomlian again. They also signed an MOU with the city of Addis Ababa, very similar integrated waste management infrastructure project to the one in Kinshasa. Again, involves setting up material recovery facilities, compact and mobile transfer loading stations, and the specialized transport logistics needed to handle waste for the rapidly growing capital city. It signifies a specific kind of growing urban logistics demand.
A rail milestone in Kenya this week.
Yes, the Mombasa-Nairobi Standard Gauge Railway, the SGR, celebrated its 8th anniversary on May 31st. The SGR has often been highlighted for significantly cutting travel time and logistics costs between the port and the capital, and it plays a crucial role for East African trade generally. Potential future extensions, to Uganda and Rwanda are often discussed as part of its wider regional impact.
Tanzania had a pretty significant transport budget announcement, didn't they?
A very substantial one, yes. The government announced a TZS 2.75 trillion budget allocated just to the transport sector for the 2025-26 fiscal year.
Wow. What are the priorities?
Key priorities listed include continued investment in their SGR network, strengthening the national carrier Air Tanzania, developing ports and airports infrastructure, and improving marine safety. This kind of large-scale funding clearly shows a strategic commitment to positioning Tanzania as a primary East African transport and logistics hub.
Finally, in East Africa, the terrible situation in Sudan. The ongoing conflict continues to have devastating impacts, including on logistics critical for just basic survival.
Yeah, the sources really underscore the severe disruption to transport and communication logistics right across the country because of the conflict, which is absolutely vital for delivering humanitarian aid. The Emergency Telecommunications Cluster, the ETC, for instance, was reported in El Obeid, assessing connectivity needs. And following recent drone strikes that targeted Port Sudan, the ETC initiated contingency planning for communications there, things like emergency messaging systems, blackout protocols. It just points to the profound challenges in the widening scope of the conflict, directly impacting the ability to move goods and information essential for survival and aid delivery.
Okay, let's move north now. North Africa. Starting with Algeria, persistent port congestion was noted again as a significant issue.
Yes, unfortunately. The sources reported alarmingly high levels of congestion continuing in Algerian ports. Waiting times were over 7 days in both Algiers and Skikda, between 5 and 6 days in Béjaïa and Djenjen, hovered around 3 days in Oran. These kinds of persistent delays are a strong indicator of, systemic inefficiencies. They impact trade flows, they increase costs for businesses, and they hinder the country's overall competitiveness.
And a strategic move in their aviation sector was also highlighted, something about a new domestic airline.
Right. The government is moving forward with a plan to establish a new domestic airline. This involves transferring assets from Tassili Airlines, which is currently part of the state oil company, Sonatrach. A joint working group has been set up to facilitate this. The stated aim is to improve internal air connectivity across Algeria, particularly to serve socioeconomic development goals in, less accessible regions. It's a significant state-led restructuring effort.
In Egypt, international projects and massive urban development were in the news.
Yeah, Egypt's state-owned Petrojet, the engineering and construction firm, secured a notable contract, $21.8 million, is with Jordan National Shipping Lines to build LPG storage facilities in Aqaba, Jordan. It sort of showcases the capacity of Egyptian state-owned enterprises, SOEs, in specialized energy logistics infrastructure, but on the international stage.
And a massive new city project as well.
Yes. The agreement to launch Jirian City in Sheikh Zayed was signed. This is planned as a massive, environmentally friendly smart city project. The estimated cost is EGP 1.5 trillion, which is roughly, $31.5 billion US dollars?
Huge.
Massive. A project on this scale will obviously create substantial demand for completely new transport infrastructure. It'll establish entirely new urban mobility patterns for potentially millions of people. And the focus on smart and environmentally friendly suggests an intention, at least, to build sustainable transport solutions right from the start.
Tunisia saw some very swift action taken on public transport safety after an incident, didn't they?
Yes. Following a bus fire involving Trans-2, the state transport company, the government response was notably quick. An immediate investigation was launched, General Inspectorate in the Ministry of Transport, Bureau of Investigation for accidents involved, and by May 27th, just days after the incident, the CEO of Trans-2 and the Central Director of Maintenance were dismissed. The sources noted the final investigation results will go to the courts. It signals a very strong stance on accountability when it comes to public transport safety.
Finally, Libya. Infrastructure projects are being reviewed, but the security situation obviously adds a layer of complexity.
Right. Libya's Minister of Transport reviewed progress on various projects this week, part of the government's Return to Life initiative. They specifically highlighted implementing vital road networks in the Sahel al-Jafara municipalities. It shows continued efforts to restore and rebuild critical infrastructure, despite, the ongoing challenges and the fragmented governance.
And the sources also noted a development related to security forces that could impact the wider environment there.
Yes. A parade in Benghazi showcased new Russian-supplied military hardware for forces loyal to Khalifa Haftar. The equipment shown included items apparently seen for the first time in Libya, things like BM-30 Smerch, multiple rocket launchers, Tor air defense missile systems, alongside upgraded vehicles like BMP-2Ms and BTR-82As.
Right.
Now, this type of military development, it obviously has profound implications for regional stability, and it could potentially impact transport routes and infrastructure if hostilities were to escalate again. The presence of advanced air defense systems, for example, could certainly affect civilian air transport operations near any areas of potential conflict.
Okay, let's maybe wrap up the regional and specific highlights with some cross-regional aviation news we saw, specifically about Fly Dubai's expansions.
Yeah, Fly Dubai, the Dubai-based carrier, continues to show the strategic agility, tapping into new and maybe underserved markets. They resumed daily services to Damascus, Syria, from June 1st. That's after a 12-year break.
12 years.
Yeah, it suggests a cautious re-engagement with that market, probably driven by some perceived demand for connectivity.
And they announced routes further afield as well, didn't they, into Europe?
Yes, they also announced 4 new European destinations launching in September 2025. Chiino in Moldova, EI in Romania, Riga in Latvia, and Vilnius in Lithuania. This expansion taps into those Eastern European markets, leveraging Dubai as a hub, right? Connecting passengers from these cities to Fly Dubai's pretty extensive network across the Middle East, Africa, and Asia. It really highlights that strategy of connecting smaller, perhaps less directly served markets via a central hub.
Wow. Okay. That is a comprehensive tour of transport and logistics dynamics across the continent. Everything from high-level national strategy down to specific port issues and new airline routes. Let's maybe take a moment just to synthesize some of the overarching themes we saw playing out across all these diverse developments this week.
Right. If you sort of step back and look across everything we've just covered, you see this fascinating mix, particularly in investment and financing. There's funding coming from all sorts of places, DFIs like the AFDB, government budgets, these calls for private sector involvement, efforts to mobilize domestic capital.
But the gap remains.
But the persistent, significant financing gap is just undeniable. It really reinforces the need for, innovative funding models and much better ways to de-risk these projects to actually attract that private money.
And operationally, it's clearly still a very mixed picture out there, isn't it?
Absolutely. The operational dynamics show these persistent, sometimes really severe issues. We saw that staggering 99-day rail dwell time in South Africa, right?
Unbelievable.
The high port congestion levels in Algeria, those ongoing labor stability risks, and the direct impact of security situations on logistics, like we discussed in Sudan or Libya. But alongside all those challenges, you do also see positive strides. Strategic investments are progressing, aviation networks are growing, specific projects like new road segments or dedicated rail lines are being implemented. It's not all bad news.
And the policy and project drivers we saw are really diverse, reflecting those different national priorities.
Exactly. Governments are actively trying to shape the sector through these tailored strategies, whether it's Nigeria looking to commercialize roads with tolls, or Algeria restructuring its domestic airline for internal connectivity, or countries like Egypt and the DRC integrating transport needs into these massive urbanization or resource development plans, or Tanzania making huge budget allocations to become a regional hub. Policies are very much driving specific types of transport development based on national contexts. What's fascinating, I think, is seeing how these policies try to bridge that gap between the ambitious investment goals and those persistent, tough operational realities.
So, putting all of this together then, based on these sources from the week, what does it all mean for you, the listener? Why does getting into these specifics actually matter?
Well, it matters because these dynamics directly shape the cost and the ease of doing business, of moving around, of accessing goods and services right across Africa and potentially beyond. Those major corridor developments, for instance, while they're long-term projects, they hold the promise eventually of lowering the cost of trade, making goods cheaper for you as a consumer, or making exports more competitive for businesses.
Or, on the flip side, if ports are congested or rail lines are blocked by things like cable theft or those extreme delays we talked about, that directly impacts supply chain reliability. It can absolutely make the imports you buy more expensive or delay critical goods getting to where they need to be.
Precisely. And investments in sustainable transport or urban logistics like those waste management projects creating jobs, or including bicycle lanes in the Gambia that can directly improve your quality of life in cities, reduce travel times, improve public health, create local opportunities.
Right. And aviation expansion means more options for you to travel, whether it's for business or leisure, potentially opening up new markets for your company, or just making visits to family and friends easier and maybe cheaper.
And while security issues might seem regional or distant, things like those events in Sudan affecting humanitarian aid logistics, or the potential impact of military hardware on air transport in Libya, they highlight the underlying complexity and the risks that can impact even basic services or your freedom of movement in different parts of the continent.
Yeah.
So this deep dive hopefully gives you the context to understand these complex forces, the big plans, the financial pushes, the tough operational realities that are actively shaping the continent's economic future, and really your place within it. It's about seeing those connections between the high-level headlines and what's actually happening on the ground.
Absolutely. So, as we wrap up this deep dive into the week of May 26th to June 1st, the picture from the sources seems pretty clear. It was a snapshot of significant financial moves, ongoing debates around investment models, continued infrastructure project momentum, strategic aviation network building, but also that constant grappling with real-world operational hurdles and the complex, ever-present security landscape across Africa.
And looking ahead, several specific points that came up in the sources are definitely worth keeping a close eye on in the coming weeks and months.
Like the crucial outcome of those Transnet wage negotiations in South Africa. That Juneteenth deadline is looming large, isn't it? Yeah. That could have immediate operational consequences.
Definitely. And the actual tangible impact of SD Mining's suspension in Guinea on that brand new Xinyu shipping venture. How quickly can they pivot? How resilient are those long-term agreements really when faced with sudden local halts?
Yeah, good point. And the implementation success or lack thereof of policies like Nigeria's highway tolling plans or Algeria's strategy for a new domestic airline, that will be really telling about governmental capacity and, public response.
And of course, the continued rollout and, critically, the financing models for those major AFDB and EU Global Gateway Funded Corridor projects. Are they actually managing to attract that need private sector investment? And are they translating into genuinely improved connectivity on the ground?
All fascinating points that build right on what we learned this week. Which brings us, I suppose, to our final provocative thought for you, the listener, to consider as you go about your week. Given the immense potential for growth in African transport, the sheer scale of investment that's still needed, and this multitude of complex challenges, it faces everything from unpredictable weather delays at ports to, geopolitical instability in different regions. What single factor do you believe is the most critical? The absolute key to unlocking the full potential of African transport and fundamentally transforming connectivity across the continent in the coming years?
That's a big question. Something to think about for sure.
Indeed it is. Thank you for joining us for this deep dive.
Always a pleasure.